JB cycle on the second try on this quick update on May the 17th. So my first video I used my new headset. I thought it was plug and play, but the audio was really bad, so now I'm using my old $5 headset. And yeah, in this video I want to understand the markets, get a feeling about what is possible from here. You know, I had a really good time the last 6 months, but the market was easy. We were losing momentum, starting to make a topping formation, broke a trend line. I was looking for maybe or probably the bull market top, and we got the correction, but it was much deeper than I thought. And what are the implications of that? And then this rally was much stronger than I thought. And yeah, many of you probably start, or I see you some saying, oh, the cycles don't work and you are wrong and you're stupid and the market will go to all-time highs and rally all the year. Well, maybe you're right, maybe not, but I have to analyze and do my stuff. You know, most of the time I will be of use. I will make good predictions. Sometimes I will be totally wrong, but let's have a look. Because we have cycles, then we can look at historical patterns and find similarities. We can find analogs, and they can help us, because the cycles work over and over again, but always with some slight variations. So what I did in my first video, I looked at the 3.5-year cycle and the corresponding wavelet I have here, and I looked for bull markets that were similar. Now there's a slight difference here, because you should see my videos about the 28-year cycle. So here I have marked green when the 28-year cycle is bullish and red when it is bearish, and currently we are transitioning into the bearish part. So what I found in my video this morning was that we have some bull markets that make some kind of start breaking down, but then they recover and extend the bull market with something that looks like a small ABC formation. And that typically happens in the green bullish part of the 28-year cycle. We get these long bull markets. But in the bearish part of the 28-year cycle, we rather get, when we have this market loses momentum, starts to break down, and it tries to recover, but then it becomes a topping formation, some kind of a double top, maybe a final higher high, maybe a double top, maybe a lower shoulder, and that is my conclusion from the video this morning. However, it looks a little bit different currently, and it's hard to interpret. One thing I'm very certain about, this correction we had this spring is not a 3.5-year cycle low. So we are still in a bull market or transitioning into a bear market. And question is then, what is it? So here I have compared today's situation with these long extended bull markets, and they kind of suggest a top sometime this fall. And this is measuring from the wavelet low at the 3.5-year cycle low. And if I make an average of those, you see here a rough scenario that we could make an all-time high this summer and then have a pullback later this summer and make the final top this fall. And when measuring from the wavelet top, we get something similar. We are approaching, we should continue the bull market maybe another 6 months. And yeah, this looks a little bit different, but some kind of a topping formation late this summer. Now the other group of scenarios were suggesting we are in a topping formation. This green average shows, we are at the end of this topping formation phase, and we should soon start breaking down. So we could still go up to make an all-time high, but at any moment we should turn down and really begin the bear market. Here is measuring from the wavelet top, and again we see we are in this topping phase, possibly, and at any time we should really start the bear market. but I cannot really say which one of these is it. But I still favor this bearish outcome, but I cannot exclude the bullish one. And in my video I showed some cycle composites, and cycle composites are bad. But I think in this, the way I used it, they have some meaning. But yeah, let's skip the cycle composites and let's rather look at the cycles and the two dominant cycles that were in this composite. And it's the 399 calendar day cycle. So, you know, it's a pretty worthless cycle. You cannot use it for much, but in this example, you know, the cycle is bearish into late this year, and if I expect us to transition into a bear market, as the 3.5 year cycle is suggesting, well, then you see, you want to look for some kind of a low when the cycle makes a low. You know, that happens over and over again. And the cycle makes a low this fall. So yeah, this makes me be skeptical about the bull market. This could be bearish. You know, in bullish trends, this cycle hardly has any effect. But when the market turns bearish, yeah, you should respect it. And similarly to the 515 calendar day cycle, it's a similar thing. You know, when the market is bearish, yeah, look for a low where the cycle is making a low. But when the market is bullish, you know, the cycle is worthless, or it doesn't produce anything bearish. So currently, the 3.5 year cycle is suggesting we should be heading into a bear market. And the cycle has a low. This also has a low very late this year. Yeah, this does not want me to be bullish. But then again, if you see, we are at this point in the cycle, and that corresponds to this one, like this. So yeah, we could be. That was the previous Trump presidential period. Yeah. So yeah, and this looks like a small A, B, C. So, in the end, we have to evaluate each oscillation, each small. Well, my understanding of the market is it does these 10-week oscillations, or on average around 10 weeks. But there's a great variation here. It can be 8 weeks, 14 weeks, and yeah, here you see it was easy. Here the market was slowly rolling over, and we broke the trend line. But what does this mean? You know, this is quite an uncommon pattern. And here the Euro stocks. What the hell is this? I don't think I've ever seen something like this. However, in the Norwegian market, I have seen this kind of action at bear market, or I should say at bull market tops. But in most markets, this is not a very common pattern. But you know, some of you have been thankful to me because I made these good predictions up here the previous months, and then some of you, oh, you stink, you are a perma bear and your cycles don't work. You know, I'm this guy. You can't trust this guy. Some guy on YouTube giving free advice, but let me be your inspiration. Many times I will have some very good ideas. Sometimes I will be very wrong. So, you know, here, if you have seen my videos over a period, you should know after a correction, we have a 5-week rally period. You don't expect any pullbacks in those 5 weeks. And you know, yeah, you should always rally 5 weeks. But in bear markets, they can be shorter. So I didn't think this would rally for 5 weeks, but it did. And it can go on further, but the 5 weeks is often a guarantee. So in the bull market, I would expect this to start making a topping formation, then consolidate, and then rally again. But in the bear market, you know, this could just crash down. So we'll see. We'll make the weekend video tomorrow, I guess.